Welcome to the Company Value Investor channel. In today's video, we are going to analyze the Apple company. We are going to analyze it through fundamental and technical analysis to attain a short-term and long-term review. The fundamental analysis is going to be applied via financial statements information, and the technical analysis aspect will include information from indicators that focused on price movement. By using both types of analysis, our focus is on stock valuation and a complete company analysis. Whenever you buy a stock or consider buying a stock, think of it as, well, it is actually buying a company. And before you take on that challenge or that journey, you should always ask yourself a couple of questions. The 5 questions that I always ask are what, when, where, and how. What, when, where, why, and how. And the reason for me to ask those questions is because if I answer those questions and I have a decent or semi-good answer or an idea of where everything's happening, then I can move forward with the purchase of the stock. For example, what makes a company profitable or grow? When is the best time to buy this stock? Where do the profits come from for this company? Why is the stock undervalued or overvalued? And how is the future outlook of this stock and or company? By answering those questions, it basically forces you to analyze a company and really take a look at what you're buying. Remember, when you buy a stock, you become an owner of that corporation. Before we begin, please take a minute and consider to subscribe to the channel, tap on the bell, and share this video with anyone who you think might benefit from this video or the analysis. And as always, throughout the video, I am going to throw in some quotations or some sayings. The reason for that is so that I'm trying to make a point and I really want you to focus on it. Some of them include cash is king, $1 today is worth more than $1 tomorrow, buy low, sell high, supply and demand. And with that being said, let's get started. Okay, so the Apple company currently at August 25th at 7:15 in the West Coast, the Apple company is selling at $494. Okay, so in the first video, I think I did a decent job of explaining my program. We are also going to take a look at options. So the way it's going to be set up is technical analysis first, then the options, and last but not least, the fundamental analysis. Okay. So here we have the most used, or I don't want to say best indicators, but they're very good indicators, and they explain to individuals how the price of the stock is moving accordingly. The first one we have here is RSI. The RSI is the relative strength index. It goes from 0 to 93. Right now it's at 93 for the Apple company. It's very high. That means investors are really buying this. Then we have the stochastic indicator. Again, 0 to 100. 100 being the top, meaning everyone's buying. We have the elder ray. The bulls are buying and the bears at a 26. Again, this indicator is also telling me that the investors are buying. We have the Williams R. Williams R is a little different. It instead of going from 0 to 100, 100 being the highest, it goes from negative 100 to zero. Zero being the highest as it pertains to buying the what the investors are doing. In this case, investors are buying. Negative, let's say negative 5 it's really up there. If you were to get a negative 90, it would literally turn green, because that means that the investors are selling. The next we have the PSR, stop and reverse. We have it at 457, and currently the price is at 496. So basically what the PSR is telling you is that if the price goes below 457, that's when you start making money if you were to buy it, and it would go back to the original price of 496. Then we have these the last three, which basically tell you the same thing: the linear regression, the Bollinger Bands, and the channels. Again, these indicators are telling us, or telling me, that right now the investors are buying it, and they're buying it at a very good rate. Okay, here we have the daily analysis table or program. It's a small little program, and basically it tells me, your basic stuff: the close, the volume, the price. Here is what I use to analyze a company on a very short-term uh, trend. For example, today on the 25th is showing a downtrend, because it takes the closing price or the current price and the volume into account, the volume of shares. Yesterday on the 24th and the 21st on Friday, there was a large amount of movement when it came to this stock. We have 86, 84, and right now currently we have 13. Okay. So right now, for today, is showing that it's probably going on a downtrend. We won't know until the market closes for sure, but there is a small chance of a rebound. Again, here we have my my favorite indicators. The Ichimoku Clouds. So the Ichimoku Clouds, they provide me with a very good, quick analysis of where the stock is at any given time. For example, currently at 494, the price is above all the lines here: the conversion line, the base line, fast line, and the slow line. Again, if the price was below any of these lines, this would either be green or neutral. And the reason why I like it so much is because I'm able to basically tell at what point of the stock is within the clouds. I hope that makes sense. But anyways, everything in red looks good for the seller. So if I had this stock, which I don't, right now I would really consider selling it. And once we go into the company analysis, we'll figure out what the best way of doing it if you own the stock. Okay, but right now, based on the indicators, everything is in red. So that means that everyone is either a lot of investors are buying it, or I should really consider selling it, because I hope I bought it earlier. I would hope that I had bought this stock earlier so that I could be making money. Okay, the next indicator, the trend lines here. The trend line, I guess this is a mid-range indicator, meaning the trend line is upward. The status, eventually the uptrend will end. In conjunction with resistance lines, the uptrend started at 344, and it was confirmed by the amount of $429. So when the stock reached $344, which is sometime in June. It basically showed that it was on an uptrend. It was going up. The uptrend was confirmed when the stock hit 429. So around August the 3rd, it was confirmed. And so since August the 3rd, for the mid-range indicator, the Apple stock has been going up and it will continue to go up. However, when the stock goes to or hits a low of 320, which is far from its current price, then you know that a downtrend is going to occur, and the downtrend is going to be confirmed by the stock hitting a low of 257. Okay, I hope it made sense, but it really is, the trend lines really do help you measure the stock's trend at the mid-range level. Okay, with that, let's go to the MACD. The MACD is my second favorite indicator. So basically what it's telling me is that since May the 15th, when the stock was at $307, that was a very good time. It is a entry and exit signal indicator. It's telling me that when the stock was at 307, that would have been the best, or the best time to enter into this stock, meaning buy the stock, so that you'd be able to maximize your profits via value. It also tells me when to exit the trade. For example, let's do this. On the weekly MACD on September the 13th, 2019, when the stock was at $218, the MACD told me enter the trade. So had I bought it, it would have gone up, 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 and then as the MACD's numbers started decreasing, sometime around the 21st of right before, the 21st of February, the MACD told me exit the trade. Exit the trade. I would have if I would have exited the trade on this date or anywhere around here, anywhere at the beginning of the year, I would have made a lot of money. So I exit the trade, stay away from the stock. The MACD is still telling me, okay, everything here negative, so stay away from it. On May the 15th was the ideal time, again, if I wanted to enter the trade. So had I entered the trade on May the 15th, I would have paid $307. Okay. And if I wanted to just hold on to it until now, that's almost a $200 increase from what, 2 months ago? Not bad. But I really like the MACD because, again, it is based on trends, and it is an indicator of when to buy and sell the stock. I like the way I have it set up because it's easy to understand for me. It clearly shows me when and at what price to enter the trade or exit the trade. Let's do the daily MACD. Okay, the daily tells me the same thing. The only issue that I have with the daily MACD is that although it tells me the same thing, good news or bad news throughout the market or for the company or the stock can make the MACD jump. As you can see, it has numerous entries and exits throughout the month and the last few months. But the daily would be for someone who is concentrating on a short-term basis, meaning They trading stocks on a basically daily or weekly basis. The weekly, which is more accurate, gives you a better position to hold on to the stock. If the daily is telling you to sell and the weekly is telling you that it's still a buy, go with the weekly. The weekly always, in my opinion, supersedes the daily information for the MACD. Okay, with that being said, let's go to the options. Okay. Here we have the option section. Let's do a couple of should we do September the 4th, which gives us 10 days? No, let's stick with the short term. That way we can do a follow-up and we can see the differences. So again, the most important section for the options is up here, the probability. My target probability or range is 80%. I tend to go maybe a few percentage points below, but I do not go under 70%. Some people stick around with 95% probability. Okay. So if I was currently the price is at 493. If I was to sell a put, and I'm only concentrating on selling puts, only because it's a different, not a different, but another way of making money if you're interested in selling the put. So if I was to sell the put with a strike price of $480, that would give me 430 days. In how many days? 3 days, because this option expires on the 28th. How much would I make percentage-wise? Less than 1%, with a daily amount of $160 a day for 3 days, with a one lot, meaning 100 shares, with an investment of almost $50,000. And if you use the margin, depending on the percentage that your broker gives you, you would be using $16,000 instead of $50,000. Okay. Now let's say that even though all the indicators, the MACD, the Ichimoku Clouds, RSI, and all stochastic, they're all telling me that it's high, investors are buying. So I'm saying, you know what? I don't know if it's going to go lower or higher because I don't know. It's just I don't feel comfortable. So if I want to increase the chances of me winning, I would go, let's say, to 475. So if I sell the option or the put for 475, it brings me back to 83. With 475, the strike price, the probability of me winning on this transaction is 83%. That's pretty good. However, because of volatility and time decay, I would only get $300, $310. It is based on the price is based on the bid and ask and the volatility. Now, implied volatility for the Apple stock is at 47%, which is relatively low. That's what the market has giving it. Down here is the current movement of the stock for the last 6 months on average, and currently, excuse me, the stock has been moving at about $11. So it has been moving up and down. It has very low volatility, and because of this, I'll decide to go a little higher. That way I can try to make a little more money. So let me go up to, let's say the stock is 490. Let's just say, you know what? I don't think the stock is going to go below 480 in 3 days. I believe that it'll stay above. And if it does, on August 28th, when the market closes on Friday, if the price is above 480, the contract, the option expires, and I get to keep almost $600 with a percentage earn of 1.2%, daily amount of $222. Okay, right now it's almost 9 points, which fits pretty good within this range. Now, the benefit of selling the put at a $485 strike price is that I automatically receive these $600. As soon as the transaction is completed, I get this money. That's pretty good money. Based on my analysis, I feel comfortable with $485 only because it's Apple company and everyone's buying it. It is below the 70% threshold. Okay, but again, uh, based on the volatility and the bid and ask, that's how much I would get. So we'll stick with 485, and in 3 days, when the stock market closes on Friday, if the Apple stock is not below 485, then I walk away, everything expires, and I keep $600. Okay. Now, on Monday or sometime next week, we are going to do a follow-up to see how this panned out. Okay, so now let's get to the fundamental analysis, the third part of our analysis. Okay, we'll start off with the yearly information, and then we'll do quarterly. So up here for 2019, the dashboard is giving us a great outlook with 3 stars. It is telling us that Apple has value with a number 5, and it's showing us that there's cash on hand. This is the external funding required to meet its obligations. It's amount made, real earnings, economic net earnings, the amount expected. We have next to it we have the rate of return at 8%, and Apple is currently providing us a rate of return. It's actually they're earning almost a 15% rate of return with a beta of 1.22. When you see the beta at 1 or close to 1, it means that they have very good credit. Okay, so let's look at the financials now. So for 2019, Apple had very good revenue. They had very good net income. Remember, cash is king. They have very good because it's positive. They also have a positive cash inflows. Whenever you see a positive change in cash here, that means inflows. That means that the company was taking in. When you see negative, that means outflows in regards to the cash flow statement. So just because these 3 here are positive, that doesn't mean that it's a good company. It just means that they're making money, which is the reason why any and all businesses go into business, is to make money. Okay, let's move down. Currently, here we have the shares outstanding for Apple, the price book, the earnings per share, the book value, again, the market price, and the earning power of 2. Right now, it's early in the morning, so there's a very small movement in regarding to the buying and selling of the shares. We have 10% of all the movement, buyers are buying, and almost 8% of all the movement, sellers are selling. I hope that makes sense. Anyways, this movement coincides with the elder ray here. Okay. So for 2019, all the financial information is here. But let's focus on quarter 3 because we are in quarter 3 currently. The average share price for quarter 3 is $425. This is the current price, $493. The earnings per share is 14. The P/E ratio is 29. The earning power of 3, almost 4%. Currently in quarter 3, the Apple stock is above the quarterly average by $67. This is all live information. The whole program, the whole system works on live information in conjunction with financial statements of the past. So everything is live and everything is used from the information that Apple provides to the SEC. All this information, again, is public through Yahoo Finance, Morningstar, Google Finance. I mean, all the information is out there. They publish quarterly information, and it's all free and it's all public. So as of today, quarter 3 has averaged had an average of $425 a share, but right now it's at $493. That's why you get the 67. Okay, so moving down. Moving down, we have 2019. In 2019, the year 2019, the value of each share was $250. This is my evaluation. The average share price was $208. So in 2019, the stock for Apple was undervalued by $42. They had a earnings per share EPS of 55, a PE of 3, with a very good earning power of 26. Okay. Now, the first thing we want to look at is the operations. Remember, Apple is in the business of selling. They are not a financial institution, but they are in the business of selling. So what we're looking for is positive inflows, or positive numbers from its operations. So in 2016, it has 65, and I'm only going to mention the first number because it's easier for me. 65, 63, 77, and 69 respectively. Again, all across the board, very good numbers, even though year to year, comparing 2019 to 2018, they had a 10% decrease. Investing, again, 2016 negative 45, negative 46, 16, and 45. So year over year, they had a 185% increase in revenue from their operations when it pertained to investing. That's very good. So they made a lot of money. They went from 16 to 45 because of their investments. Financing, okay. They had negative 20, negative 17, negative 87, they had, and negative 90. So they spent a lot of money financing. Okay, year over year, a negative 4%. Revenue, cash is king. Remember that. $1 today is worth more than $1 tomorrow. So, revenue, how much money did they make? And remember, Apple is in the business of making money. So they had 215, 229, 265, and 260. Very good revenues throughout all 4 years, with a decrease of negative 2%. Okay. Shares sold. Okay, we have 5, 5, 5, 5, and 4. Oh, year over year, they had a negative percent drop, so they were stable. They were not making money selling their stock. They were making money through financing in 2019, through financing and operations, which is what they do. You always want to see if, depending on the type of company, in this case Apple, they sell tangible assets. So you always want most of their cash inflows coming in from their operations. Now let's go to the cash. They had 67 in 2016, 74, 66, and 100. Okay, there was a 51% increase year over year from 2019 to 2018. And the reason being, it was not because they made money, they made a lot more in operations. It was because they made a lot of money, or they had a very good year in regarding with their investments. Remember, their investments rose 185%, and that's why their cash went up 51%. They went from 66 to 100. Okay, now we get to the very meat of the company, the ROIC, return on invested capital. Let me explain something about ROIC. This is where you know, or you can tell, if the management of any corporation is actually doing its job. If it's a good management team, you will know through the return on invested capital. If it's a bad management team, you'll also know through this identifier. And the reason I say that is because let's just say that you own Apple stock. You, as the owner of the Apple company, remember, even if you own one share, you are an owner, whether you own one share, 100 shares, 100,000, or 1,000,000 shares. You're still the owner. And the company needs to compensate you either through dividend payments, or if their goal is to grow, they'll keep the money and not pay you dividends so they can grow. The issue is, on a lot of companies, this is how you can tell if the management team is doing a really good job. Let's look at Apple, and I'll get into more detail once we go through the numbers. So in 2019, the return on invested capital was 23%. 2018, 19%. And these are all positive numbers. 2017, 16%. And in 2016, 17%. What is this telling me? This is telling me that Apple has a great team in place, that not only do they pay a dividend to the owner, which is you, the person who owns the stock, but they also keep and make so much money that they're able to grow. Basically, the easiest way I can explain it to you is, think of it this way. Apple is growing at a steady rate, but in return for keeping a lot of the money as retained earnings, they are wisely investing that money, and they're giving you a 23% return on your investment, which in this case is growth. 29 throughout the years, throughout all 4 years, they were giving you a great rate of return. 23, 19, 16, 17. This is the reason why people like Warren Buffett invest in this company, is because they know that if they invest $100 today, tomorrow they'll have $123, because this company is giving you a great rate of return, 23% in 2019. And we'll break down the quarterly so we can see. That is outstanding. This makes it a very good company. Just by looking at the rate of return, you know that they have a legitimate team in place that they know when, how to manage the resources, all the cash inflows. They do, so far they've done really good the last 2 years investing it. Okay, enough with the return on invested capital. Most of the companies that have negative numbers here, the reason why they have negative numbers is because they're not managing your money as a stock owner. They're not managing your money properly. If they're not paying you dividend and they're giving you negative numbers or 1% return, that's not going to cut it. You should consider leaving the company or selling the share if they're giving you numbers year after year after year. But in this case, Apple is giving you a rate of return better than most companies out there. I mean, a lot better. Enough with the ROIC. Let's go with the earning power. Again, 26, 27, 29. Very good earning power. Now, this is another favorite section of mine. Okay, cash asset per share. So here we focus on the safety, on the margin safety. In other words, let's just say that Apple, and we have the information here, the book value, current asset per share value, liquidating value per share. Everything is here. Now this is important because it tells me, let's just say something drastic happened and Apple went belly up. It went bankrupt and now they have to distribute and liquidate everything. For my 494 investment today, I would only get about $11.50 per share. So what does this tell me? It basically tells me that Apple is greatly overvalued based on the fact that if it was liquidated, it went belly up. I would only get $11 for the investment of $500. Same thing with 2018, 12, 15, and $13 respectively. So just because it's a great company and the management team really know what they're doing, they give you in return. They not only pay you a dividend as the owner, but they also give you a great rate of return on your investment. Just because they're doing all the great things or all the good things does not mean that it's worth $494. Because remember, when you're buying into a company, you want to be sure that, and when I say you're buying into, when you purchase a share of stock, you're the owner and you're buying into the company. You're basically saying, or the Apple, and these are all Apple's financial statements. This is their information. They're basically saying, well, worst comes to worst, if we have to liquidate and go bankrupt, for your $500 investment, you're only going to get $11. It'll be only worth $11, in other words. I hope that makes sense. Okay, let me show you a couple of things that I added to the program here. Here we have the VIX indicator. Okay, some people call it the fear indicator. And what this VIX indicator does, it measures the volatility at the market at any given time, right? So currently, the VIX is at 23. Yellow. For me, everything is color coded because it's easier. If it's red, that means for the most part danger or too hot. If it's yellow, kind of like a tri-light. If it's yellow, be cautious. Now, if it's green, it's really low. We have two indicators that I just added to the program. We have the VIX and the market GDP indicator. So again, back to the VIX. Currently, it's at 23. Quarter 3, it was high with 36. And okay, so let me explain. So the normal VIX number should be between 10 and 15. It'll be green. That's normal. Volatility is normal. Everything's going smooth in the market. 10 to 15. Anything above 15 and 30, it's be cautious, be careful. And anything above 30, uh, is hot. Actually, it's 25. It's hot, meaning it's too high. It means the fear factor for individual investors is rising, because that means that basically the volatility is going up. People are uncertain, so because of that, the options, you get a lot more money on the options. People try to secure their positions, and that's the whole purpose of this indicator here. Now, the highest so far has been at 85, and believe it or not, the 85 was reached right before the crash earlier this year. So I like the VIX indicator. I strongly recommend that if you are making certain purchases, every now and then look at it, because it's going to tell you how the market is reacting at a certain time. So right now it's at 23. Quarter 3 it was 36. 2019 it was 28. But the highest currently has been 85 this year. Okay, the next indicator is the market GDP. And basically what this number does, well, what it does, it takes the entire market and compares it. It gives you you make a comparison with the GDP. Anything over, I would say 130, it's not good. Let me try to explain it better. So a normal number for the and this is called the Buffett indicator, because Warren Buffett uses it a lot, or I don't know if he uses it, but individuals claim and write that he uses it, and it's a very good indicator. It tells me where the market is as compared to GDP, and that's important because you're able to gauge. So normally you want the indicator to be on a 1-for-1 basis, meaning the market and the GDP are basically 1-to-1 ratio. Now, you can have a 20% increase or decrease, meaning 1.20 or an 80. That's normal. Anything above or below 120 or 80 is not good. It really isn't. So the highest indicator that we had was 1.66. This means that the market was overvalued by 66% as compared to GDP. In 2019, it was 41% overvalued. Quarter three, the market was overvalued by 66%. Currently, the market is overvalued by 73%. So that means, basically, in other words, is that we investors are putting so much money into the market, we're basically overvaluing it, as opposed to GDP, everything that we export and import and all that. So it's not in line. By putting all this money into the market, we are basically overvaluing everything. If it was 120 or 110, it would be good. Even at 141 is decent, but as you can see, currently it's 73% overvalued, and that's why you're going to see a lot of the companies being priced overvalued in my program, is because basically what's happening is individuals are not purchasing stocks on companies or becoming owners of companies based on the value. They are doing it because they want to make more money than the next individual. And so they're hoping to make a profit if somebody else buys it at a higher level. And that's that's not the way of going about it, because you can lose a lot of money that way. So what is Apple doing? Why do I keep saying that Apple is doing all the right things? Well, let me explain back over here on the return on invested capital. Apple knows they're a very good company. Okay? They know that. They know they have everything aligned. So what Apple is doing is, remember, supply and demand. There's a big demand, and Apple knows this. There's a big demand for their stock because they have everything, everything that they tell you they do, and they surpass everything. So they know that there's a high demand for their stock. So what do? They do a split. They want to be able to sell a lot more. Uh, they're opening the gates to supply. They're supplying us with all these shares that are going to be cheaper. Instead of paying $500 in a few days, it's going to be split. That makes sense? Okay, let me explain another way. So let's just say the beginning of July. Okay, the beginning of July. Well, something happened when updated. Okay, back to this. In the beginning of July, that's what, 25th. Okay, let's July, a month ago. A month ago, the stock was $370, right? Now it's almost $500. What did Apple do in 30 days, in 1 month, to go from what is it, 370 to 497 to almost $500? Nothing really. What happened is, back to the market indicator, people started buying it. They started buying because it's a good company, first of all. But they overbought it, basically what I'm trying to say. They overbought it because they were trying to make more money than the next person. So basically what happened is, on the 31st, people were saying, well, I'll buy so many shares because, I bought it at 370. The next person has to pay 425, and then so on until now. It is overbought. They didn't buy it on the value. Now, Apple is a very good company, but not for $500. Not for $500 a share. So they're doing something very smart, actually. What they're doing is providing a lot of affordable shares with splitting the stock. So instead of paying $500 in a few days, the stock is going to be cheaper. They're supplying the market with what it wants. They're demanding Apple stock because it's a good company, and so they're doing what they're supposed to do. Now, I can guarantee you for a fact that Warren Buffett is not currently buying the stock at $500. If he bought it, he probably bought it around here when it was 280, 290. I can guarantee you Apple is not buying their own shares at $500. It wouldn't make sense for them to buy their own shares so high. They're going to buy the shares when they're cheaper. I can guarantee you for a fact. Now, let's do this. Let's go back and do the price estimations. Price for the Apple. Okay. So currently, I have the price for Apple at $281. Okay, not $500. I can almost assure you that Warren Buffett and them bought it around this price. Now, when you compare it, if I was to buy it right now, I would have a 43% decrease if the price went back to its original estimation, which is $280. This is my estimations. Estimations are nothing more than speculations. I don't use the term speculation, but it is speculating because most people, they don't like the term speculation. I guess estimation makes more sense. I don't know. Anyways, now for the short term, I have it as 125. Short term meaning less than a year. Now, why did Apple decide to go with a 4-to-1 split? Because in the short term basis, this is the ideal price. Again, currently, if I was to buy it right now in the short term, I wouldn't, I would consider buying at $125 is the ideal price. Now, for the long term, even though Apple is a very good company, an excellent company when it comes to their operations, the long term, meaning 10 or more years, the stock, I have the estimation at $175 a share. Okay. Again, I hope that made sense. But let's do the questions now. Let's do the whole purpose of this video was to answer the questions, the what, when, where, why, and how. And based on that, we should come to a conclusion if this is a good company or not, or a good stock to buy. We know it's a good company, whether it's a good price at $497. Well, the first question is, what makes this company profitable? Well, that's easy. What makes it profitable is the fact that they've had, you know what? We didn't do the quarterly. Let's do quarterly. Well, let's run a couple of years. Okay, 2018, they were again valuable. Again, positive. 2017. Again, they had value. Positive. They had negative cash inflows. And 2016, again, value. So overall, for the last 4 years, they've been very steady. Very steady. They've had value. Let's do quarters. We didn't do the quarters. Okay, the most current quarter number 2, they have positive revenue, positive income, negative cash flows. Okay, so we know this information. Okay, so let's do the analysis. So quarter number 2, they have operations positive. Okay, that's good. Year over year, a 22% increase. Investing negative, positive, negative. Financing negative. So they put a lot of money into financing with negatives. Okay. Most of the money in quarter 2 was made through operations. Revenue 59, 58, 91, 64. Year over year, 2% increase. Shares sold. Okay. So they're making their money on operations, which is what they do. They sell. Okay. Again, with the ROIC. On a quarterly basis, they're still giving us 4%, 7%, almost 5%. They're giving us a very, very good return on a quarterly basis on our investment. And we're also getting a dividend if you were the owner of the stock, which is very good. It's good that they're giving you such a high rate of return. And then now, the liquidating value per share in quarter 2 was $10. So an investment of almost $500, if the company went belly up, I would only attain $10. Okay. So again, a value of 5. Let's do other quarters. Okay. So I keep getting 4 and 5s. That means the company is very stable. Okay, let's go back to the most current quarter. And let's go back to answering the questions. Now that we've done the quarterly analysis, again, the numbers look really good. The only concern would be the financing. They spent a lot of money. Well, no, I mean, it's a big company. It's fine. Okay, so let's answer the questions, which is the reason why we're doing the video, to see if we are going to invest in the Apple stock based on all the analysis that we've done so far. So question number one: what makes the company, this company, profitable or grow? Well, again, let's do the yearly. That way you get a better view. What makes this company grow is the fact that they've had, for at least the last 4 years, a very strong operations cash inflows. In the last few years, they've really done a very good job investing. But most importantly, this company, the Apple, gives you a great rate of return on your investment. Okay, so that's where they get their money, is from their operations. They have a great management team that knows how to make the company grow. Every year, it seems, for the last 2 years, they've been increasing growth. So they know how to invest the money. As an investor, they know what to do with the money. They pay you a dividend every quarter as the owner, they should, and they also provide you with a very, very strong rate of return. And 23% is outstanding. Okay, so when is the best time to buy the stock? Well, the best time, let's go back and check. The best time would have been right after the crash, or around the crash, 273. Oh, 280, right here. I'm sorry. The best time would have been on last year. But you could have entered the market at $300 here. Technically the best time would have been, or the cheapest time would have been right here on the 28th, when the stock was at 273. You buy at 273 and you would have made a lot of money. The only thing is Apple stock is not cheap. So let's just say you wanted to buy 100 shares right now. 100 shares would cost you what? Where is it? Oh, up here. Almost $50,000. Okay, back to the questions. I'm just talking now. Let's go back to the questions. Question number two. That was question number two. When is the best time to buy the stock? Again, it was at 273, mid-February. Where do profits come from? Well, we know that profits come from, again, the operations and investing. Mainly their operations. They know how to sell a product. They're experts at what they do, and they have a great financial team that knows and does what it says. Why is the stock undervalued or overvalued? Well, again, the stock at $500 is overvalued. My estimations puts it right now currently at 280. Puts it right here, 280. Where's 280? Right here. At 280, the stock is a good buy. Again, the only reason why I think I have not read anything, or I don't know anything for a fact, but I think and I believe, based on the numbers, is that investors are just buying this stock based on demand. There's a very a limited amount of shares, so they're buying in order to make more money than the next person. But in a few days, when the split occurs, they'll have access to more shares, or cheaper shares. Instead of paying 500, you'll pay, I don't know, 100 and something per share, which is the smart thing to do if you're Apple, is provide the market with what it wants. They're demanding more shares because it's a good company. But at $500, no. At 280, yes. So that answers the why. Basically, at $500, the stock for Apple is overvalued by a lot. Now, the last question is how? How is the future outlook for this stock? It's not that good. Uh, currently I have the estimation at 280 for the short term, 125, and for the long term, meaning 8, 9, 10, 11 years from now, I have the stock at $174. And with that being said, I think we covered everything. This concludes the analysis of the Apple Corporation. We conducted a technical analysis using indicators. We also conducted the options and the fundamental analysis. Now, the last thing I want to say, well, there's a couple of things that I want to say, is consider subscribing to this channel, tapping the bell for further notifications, and we are going to do follow-ups to make sure that everything that we're stating here makes sense to you. That's the whole purpose of a follow-up. I'm thinking of doing 2 follow-ups, one for the options and then another for the outcomes that we attain from the indicators. For example, when the stock starts to go on a downtrend, I will look at that, and then we'll also look at the indicators, what they call the Warren Buffett indicator, the market GDP indicator, and the VIX. We'll look at that. We'll do follow-ups on that, but the follow-ups are going to be just on Apple so that everything makes sense. And one last thing I want to say, if I get 100 subscribers, what I'll do is I'll create a platform or a dashboard or a website, I don't know yet, where I will dump all the information, and you as the individual investor can go in there and do your own analysis. Again, it's all free. I do this because I enjoy it. I don't work for anybody in particular, but I'll put it out there. The only thing that I ask is that I want to be able to have at least 100 subscribers so that it makes it worthwhile. I think right now currently I have 40. Yeah, but the goal is 100. That way I know at least half of 100 people are going in there and using the system. It does me no good to create something and I have only 10, 20 people using it. I want as many people as possible to use it. So the goal is 100. If or when we make 100 subscribers, then we'll talk about how we're going to put it together as a team. So I'll ask for recommendations on what you want, and then based on your needs or wants, I'll create the platform or the dashboard or the program, so you can just go in there, log in, or give you a link or something, and you'll be able to do your own analysis, and it'll have a lot of this information. So I think it'll be helpful. But again, it's work. It's a lot of work. In order for me to get the satisfaction, I need people to use it. So the goal is 100 subscribers. So please share it so other people can benefit from it. If you like the video, give it a thumbs up. Comment on it. If you think I have provided the wrong information, let me know. Help me become better. Also, if you think that I spoke incorrectly about something, also let me know. We're only trying to help each other here. Uh, I'm hoping that it's helping you in some way. And with that said, always remember, cash is king. $1 today is worth more than $1 tomorrow. Always buy low and always sell high. And as simplistic as it sounds, supply and demand, they are part of each other. So, with that being said, this concludes the analysis of the Apple Corporation. I will put a link to the my email where you can reach me. Again, comment. I will have a timeline to make it easier. So If you're an options person, you go to the options section. If you're a technical person, you go to the indicators. If you're a value investor, you go to the fundamentals. Or if you just are looking to focus on the individual indicators such as the VIX or the Warren Buffett indicator, you go there. And I think by doing that, it'll help make it easier for all of you out there wanting to make money in investing. And you will make money in investing. Just remember, take your time, make your analysis, whatever they may be. And I hope and I wish you nothing but the best of luck in your investing. As always, take care.